Hello everyone, welcome to Keli College of Commerce. I, Professor Sneha Hiremat, would like to continue Chapter 4th, Planning. Objectives. As it was already explained, the standing plan, in which the plan is used again and again whenever a particular situation arises. The example was objectives. So, what is an objective? The first step in planning is setting objectives. Objectives are the ends which the management seeks to achieve within a given time period. Objectives can be set to be desired future position that the management would like to reach. They are very basic to the organization. They are very basic as well as they are defined as ends which the management seeks to achieve by its operations. Therefore, an objective is simply stated as what you would like to achieve, or that is the end of the result of activities. For example, an organization may have an objective of increasing sales by 10% or earning a reasonable rate of return on investment, say around 20% profit from business. This represents the end point of planning, that is objective. All other managerial activities are directed towards these achievement of the objectives. They are usually set by the top management of the organization and focus on broad general issues. They define the future state of affairs which the organization strives to realize. They serve as a guide for overall business planning. Different departments or the different units or the different divisions in the organization may have their own objectives. Objectives need to be expressed in specific terms. That is, they should be measurable in quantitative terms. That too in the form of a written statement of a desired results to be achieved within a given time period. Say, for example, the objective of a mobile company can be to increase the mobile users by 10% in 2 years. Here the given time period is 2 years, and which is the objective is in a written statement that to increase the mobile users by 10%. So the objective should be expressed in specific terms, which they should be measurable in quantitative terms. Objectives define us the future state of affairs which the organization is aiming to achieve. So hence they serve as a guide for overall business planning. The second is strategy. As explained earlier, there are two broad categories in the plan, that is standing plan and the single use plan. The objectives come under standing plan. The strategy also comes under the standing plan. Standing plan, which means the plan in which it is used again and again whenever a particular situation arises. Hence, this strategy is nothing but a comprehensive plan made in response to changes in the business environment to achieve organizational objectives. Strategy provides the broad contours of an organization's business. The three dimension or the three phases of strategy, they are determining the long term objectives, adopting a particular course of action, allocating the resources necessary to achieve that particular objective. So this is a strategy. A strategy is formulated to meet the changes taking place in the business environment. How to deal with the present business environment? What strategy will be adopted? That is a comprehensive plan which is made in response to the changed business environment in order to achieve the organizational objectives. For example, a game strategy adopted by a team in a cricket in order to win against the opponent team. So that is a strategy. The strategy is adopted in order to achieve the objective. The change in the environment, that is in business environment, it might be in economic terms, political, social, legal, as well as the technological environment. It will affect an organization's strategy. Strategy involves preparing oneself for meeting the unforeseen factors. Major strategic decisions will include decisions like whether the organization will continue to be in the same line of business or combine new lines of activity with the existing business, or to seek acquire a dominant position in the same market. That is, whether the strategy, for example, strategy might be of mergers, strategy may be of acquisition, that is acquiring another company and starting up a new business. A company may merge with a B company and start a new company that may be called as a AB company. That is a strategy. A company's marketing strategy may relate to some following questions, like who are the customers? That is, who are our targeted customers? Is it only a particular gender? Is it the only particular class of customers? That is only middle class of customers? Is it only, it may be focused only on the young generation? So who are the customers? What is the demand for the product? Which channel of distribution is used? Is it the direct channel, that is directly from the businessman to the customers, or is it B2B, that is a business to business? So what will be the channel of distribution? So this is a marketing strategy. What is the pricing policy? How do we advertise the product? So answering all these questions or relating to all these following questions is called as a marketing strategy, or the strategy which is involving a comprehensive plan. For example, Pepsi and Coca-Cola, they are the competitors in the soft drink market. If Pepsi reduces the prices of its products in the market, it's a strategy. Then counter plan of Coca-Cola will be to maintain its market share, maybe considering as a strategy. So this is called as a strategy, wherein which a company or the organization plans in order to respond to the changed business environment. That is maybe due to the competitors' change in the pricing policy, or a new competitor is entering the market. So how to face that particular changed environment? To face that change, if a plan is adopted, a counter is given, then we call it as a strategy. It is formulated by top management due to its relative importance. It is formulated after considering both internal as well as external environment. It is a dynamic as it depends on the ever changing business environment. This strategy provides guidelines for thinking and action. Policies. Policies are also coming under the category of standing plan, which can be used again and again whenever a particular situation arises. Policies, they are the general statements that guide thinking or channelize energy towards a particular direction. These policies are derived from the objectives. They define the broad parameters within which a manager may use his discretion to apply the policy. For example, let's take policy of a company may be not to employ any person who is less than 18 years of age. In order to achieve the objective, that the objective of an organization might be to increase the sales by 20% within the one financial year. In order to accomplish that, maybe a policy may be adopted by the company that is not to employ any person who is less than 18 years of age. So this is called as a policy. Policy defines the parameter within which a manager may use his power or the discretion to apply that policy. There are policies for all the levels as well as for all the departments in the organization, ranging from major company policies to minor policies. Policies provide a base for interpreting the strategy. They are the guides to managerial action as well as for the decisions in implementation of a strategy. The policies predecide some issues, avoids confusion. It becomes easier to resolve problems or issues. In short, policy is the general response to a particular problem or situation. For example, if any of the problems arises, that is while paying the employees, if there are any issues that may arise in the company, then company may decide in order to resolve that problem, some of the companies may adopt certain policies. Major company policies are for all to know, that is customers, clients, competitors, whereas minor policies are applicable to insiders and contain minute details of information which are vital to the employees of an organization. That means some company policies are for everyone, customers, clients, competitors, for everyone, but there are some minor policies which can be made by the organization which is applicable only for the insiders. For example, the decision taken under a purchase policy would be in the nature of a manufacturing or buying decisions. Should a company make or buy its requirements of packages, transport services, printing of stationery, water and power supply and other items? That is to decide make or buy decision. How should vendors be selected for procuring supplies? How many suppliers should a company make purchases from? That is, from how many of the suppliers, or from how many of the creditors the company should make a purchase. What is the criteria for choosing suppliers? So all these queries would be addressed by if there is a purchase policy. That is, if the policy of the company is not to buy anything on the basis of credit, then it would be the policy, it makes the company easier to make a decision that person who is giving us a quality raw materials for the purchasing for the production function, who is giving us on the basis of cash and who is giving us a quality raw materials from him, he will be the supplier for our company. So the purchase policy helps us to decide. So this was all about the policies. Next comes procedures. Procedures. What is a procedure? A procedure is a chronological sequence of various steps to be taken in order to perform an activity in an most efficient manner. A procedure is generally established for repetitive activity. Here it is very clear that it is established for the repetitive activity. So that the same steps are followed whenever that activity is performed. For example, an enterprise may have the following procedure for the purchase of goods. First, they may identify the various suppliers, invite quotations from them, compare the quotations so that whichever the feasible cost would be, that particular quotation will be selected from that particular supplier the company might purchase. So placing of order to the supplier who offers the best quotation for us by comparing the quotations. Receipt and inspection of goods. After giving the placing the order, receipt must be obtained, as well as the quality inspection has to be done of the goods which the company has purchased, and finally making payment to the supplier. So this is might be a procedure for purchase of goods. So this involves a sequence of steps that is taken, which are generally to enforce a policy and to attain the predetermined objectives. Procedures are very rigid and they do not leave any scope for individual judgment. Nobody else will come here and change the procedure. It's very rigid. It will not have any scope for any individual judgment. This has to be done in this particular sequence only. One has to identify the various suppliers, one has to invite the quotations, has to compare, then place order, then receive the receipt and inspect the goods, then make the payment to the supplier. If this is the procedure followed, then it helps in order to perform any activity in the most efficient manner in the organization. So policies and procedures, they are somewhat related to each other, as procedures are the steps to be carried out within a broad policy framework. If the policy is made like this has to be done in a particular manner, so that after the inspection, after the verification, the supplier will be paid so much amount or the agreed amount. If that is the policy of the company, then procedure will be this. The procedure involved will be that. So an enterprise may have different procedures, like procedure for processing an order, recruitment of employees, or the collection of payments, and so on. If the organization makes a policy that employee will be appointed based on their qualification or based on their skills, if that is the policy, then recruitment of employees will have a particular procedure. That is, commonly everyone will be called for the interview or a group discussion will be conducted, a written examination might be conducted. So here a fair policy will be made by the company, that is no relative or there would be no biased judgments in case of recruiting an employee. And to apply that policy, certain steps will be involved. That steps are called as procedures. So that was all about the procedure. Next is a method. Methods A method is a prescribed process in which a particular operation or an activity is performed. Methods will specify the manner in which each segment of a task can be performed efficiently and effectively. The methods may vary from task to task. For example, there are different methods available for valuation of stock, like first in first out, last in first out. What is this first in first out? It's a method for evaluation of a stock. For example, if a product is purchased on 1st of September and today is 14th September, till 13th every day products will be purchased in order to resell them. But if a customer is asking on 14th September, he will be given the product which is purchased on the 1st September. That is, first in will be first sold, first out. If it is a LIFO method, that is last in first out, then a product which is purchased on 13th September, that will be sold first, that is last in first out. So if we are calculating today, that is stock, if we are evaluating, then the latest sold product, that is LIFO method. If LIFO method is applied, then old stock will be our, or the 1st September stock will be our valuated as a stock valuation. That will be the value. Business can select any method for valuation of its stock. Selection a particular method avoids confusion and helps in smooth functioning. Selection of a proper method saves time, saves money, saves effort, as well as it increases efficiency. Methods should be stated in clear and in a precise term to improve the organizational efficiency and to bring orderliness to the workplace. Next is rules. Rules are specific statements that inform us what has to be done. Rules reflect a managerial decision that are certain action or must not be taken. Employees are expected to comply with the rules while performing an activity. For example, a company may have the rule of no smoking in the factory premises. Rules are rules. Rules are rigid in nature and demand strict compliance. A rule of a company may be to come on exact time. If a person is late, maybe his half day salary might be deducted. So, rules are demanding for the strict compliance. They do not allow for any flexibility or any discretion. Rules are usually the simplest type of a plans, as there is no compromise or change unless a policy decision is taken. Rules are enforced to maintain discipline, to avoid disorder and chaos in the organization. Their violation generally is associated with some sort of a disciplinary action. So that was about the rules. Next is budget. As already explained, a budget is a statement of expected result which is expressed in numerical terms over a specific period of time. Budget, for example, it may be of a cash budget. Cash budget is prepared to show the expected inflow of cash as well as the outflow of cash for a period in advance. That is, the future financial year, the next financial year, for that next financial year, if the cash budget is prepared. Cash inflow, that is, it means that because of the sales or because of any operating activity or any financing activity or any investment activity, if the cash is flowing in the business, cash outflow may be in the form of expenditure or the expenses. The net cash position can be determined by subtracting cash outflow from cash inflow. This budget serve as a control device for measuring the actual performance. Budget facilitates comparison of actual results with that of planned ones as they are expressed in numerical terms. Previous year cash budget can be compared with the this year cash budget, or this year cash budget can be compared in the future, that is in the next year when it ends. So budget injects a sense of clarity. It directs the purpose and the activities of the organization. Budget is a fundamental planning instrument in a number of organizations. Some important budgets which are used in the organization, they are sales budget, production budget, cash budget, revenue and expenses a budget. Program. Lastly, program. Program is a combination of objectives, policies, procedures, rules, tasks, and other elements which are designed to get a systematic working in the organization. For example, a company may have a program with respect to construction of new factory premises. So, program involves planning for the future events and establishing a sequence of required actions. It gives a step by step approach to guide the action necessary to reach a predetermined goal. The minute details are worked out within the broad policy framework. Program can be of different types like production program, training program, sales promotion program. Why the word program will be used? Programs are the detailed statements about a project which is outlining the objectives, policies, procedures, rules, tasks, human as well as about the physical resources that are required and the budget to implement any course of action. Thank you all.